Good morning, Bitcoiners. Hello, and welcome back to another edition of your Bitcoin Economic Calendar. I'm Mauricio Di Bartolomeo, co-founder of Ledin, and as with every week, we bring you the news and analysis you need to start the week off right in Bitcoin. Today is Tuesday, November 23rd, and we have a very special episode for you this week. In today's issue, we're going to start by talking about the first ever Bitcoin sovereign bond, which was announced last week by El Salvador along with its plans to build a new Bitcoin city. We're going to discuss how this potential new offering could change the game in terms of sovereign bonds and fundraising going forward. In addition to that, we're going to talk about the Fed's hot take on stablecoin regulation. There was a lot of Fed activity last week, as we covered, and one of those speeches was really interesting, where one of the Fed governors, Mr. Waller, shared some pretty interesting insights and his views around stablecoin regulations and what will be the best way to do that. So we're going to break that down here as well. And last but certainly not least, we're going to look at Ethereum fees through the lens of Constitution DAO. This was a recent experiment that attempted to purchase a copy of the US Constitution. And although it did not win the bid for the copy itself, we did learn a lot of lessons from it. So grab your coffees, everyone. It's going to be a great one. And before we get going on today's show, we wanted to remind our Canadian viewers and all of those that can participate in this giveaway that this is the last week. We're entering the last week in which you could participate for the One Bitcoin giveaway by referring your friends and family. Some conditions apply. There are some countries that can participate and some others that unfortunately are excluded for the time being. You can check the full details on our website, ledin.io, and learn how you can participate to potentially win this One Bitcoin giveaway by referring your friends and family to the Ledin platform. So starting as we usually do with Bitcoin, we see here that Bitcoin closed its first losing week for the month of November last week, dropping double digits down 10.43%, closing Sunday at $58,678. We are seeing some downwards continuation so far this week, with Bitcoin prices down 2.38%. So far in the week. We do see that they did reach significantly lower levels yesterday, but they since have bounced back from this support range right here. From a technical standpoint, we see that Bitcoin was trading very near this 56,000 level of support yesterday. And if this level holds, which it seems like it is holding as of today, this could be where Bitcoin essentially comes and finds some footing. However, there is another interesting support level down at around the $52,000 mark. So it is not out of the realm of possibilities that Bitcoin could try to visit this 52,000 level if this 56,000 level of support were to breach to the downside. So if this 56K doesn't hold, it is likely that we will be visiting this 52K level. That's from a technical standpoint. Now, looking at the macro events that are happening, there's a lot to cover, but essentially we're trying to distill the sort of highest impact, highest signal headlines that could impact Bitcoin prices going forward. Last week was another landmark week in Bitcoin history. The President of El Salvador announced that the country would be issuing the first ever sovereign bond backed by Bitcoin. And this is the headline that you have around this topic. This was by CNBC. We actually had the chance, the Ledin team was in El Salvador last week for LibitConf, and we'll break that down shortly, but it's pretty interesting what's happening down there. So just to break down the bonds at a high level, half of the bond proceeds, so the proposed bond note is for a $1 billion offering, and half of the bond's proceeds would be used to purchase Bitcoin. The other half would be used to build a new city and the infrastructure to essentially build this new city. Bitcoin City, how it would be called, is apparently planned to be near a volcano, and it will include, part of the investments will include Bitcoin mining infrastructure to be used, that would be using renewable energy from that volcano. The project is very ambitious, and while it may look juvenile to some, the implications of this bond offering could be very serious. If El Salvador is able to bypass the regulated bond market and tap into $1 billion worth of debt to fund its infrastructure development, it may undermine the International Monetary Fund's position. If successful, it will likely be quickly followed by others. So very interesting what is happening here. And certainly there will be more headlines around this topic, and we will continue to track these developments. Yesterday, Monday, the news also broke that Mercado Libre, Latin America's largest company by market capitalization, announced that it would start allowing its clients to buy and sell cryptocurrencies. This is the headline you have on your screen, and this is quite meaningful. As we mentioned, Mercado Libre is LATAM's largest company by market cap, and this could be a way of getting crypto into the hands of many, many new people in LATAM. Now, the feature, the option to buy and sell in crypto was rolled out to a small group of beta clients in Brazil earlier this month, earlier in November, and it will be rolled out to the rest of its Brazilian clients in the coming weeks and months. The news is very meaningful, as this could be a step towards letting merchants accept crypto payments. This, again, would be a huge step towards a circular economy built around digital currencies. Separately from this announcement and the bond, Jack Dorsey from Square released a white paper for Project TBD, which is essentially a decentralized Bitcoin exchange. While this project is still in its infancy, it tackles several important issues, such as decentralized identity, liquidity options for Bitcoin on-ramps worldwide, and the need for these on-ramps to comply with financial regulations. We will continue to monitor the developments around this protocol, as, given Square's reputation for execution, it does look likely that they will be putting a lot of effort in moving this project across. Again, there are so many important issues that are trying to be tackled by this project that, in my view, even if it accomplishes one of them, it'll be a huge success. So we will continue to track the developments on this project, and we wish, obviously, Square and the team the best in their efforts. Looking at some price action indicators and where we could be heading, or where market sentiment is right now, the funding rates for perpetual futures, and this is in the Bitcoin side. I'm just going to put this indicator here on your screen. So this is the funding rates for perpetual swaps right now. These are often used by speculators to obtain high leverage on Bitcoin markets. And the funding rates as of yesterday were actually quite negative. And this morning, with the recent rally, we've seen them kind of flip back into the positive, out of negative and into the positive. So what this means is essentially up until very recently, there were more investors using leverage to be short the contract, so hoping Bitcoin prices would go down, than investors being long the contract, therefore looking for prices of Bitcoin to move higher. So all this to say that in the sort of leverage camp, there is no big sort of funding desire to the upside. There doesn't seem to be accumulated leverage to the upside. If anything, people were actually seem to be positioned for a down move as of late last night, and then this morning, given the price action, things have flipped. But it's basically hovering around zero. It's not really showing any conviction in being leveraged up to the upside or down or to the downside. It seems to be quite neutral, which is technically a positive thing going into the rest of the week. If we look at the options flow for Monday and some of the option flow that we're seeing this morning, and I'm just going to put this in their screen to show you, we're seeing that there's 23% of the flow has been buying of put contracts, which are downside protection contracts. 15% of the activity has been selling these put contracts. So selling the puts can be foreseen as a bullish positioning. Buying the puts is seen as a negative positioning, so defensive positioning, people looking for prices to go down. Call selling is pretty even with call buys, and so yesterday there were significantly more call sells than call buys. So call sells are people that see limited upside. Call buys are people that are looking to buy in and find some lift from the Bitcoin price appreciation. So essentially, as between yesterday and today, we've seen more buying of puts than selling of puts, which is bearish, and we've seen more selling of calls than buying of calls, which is bearish. So again, these are signs that investors are potentially seeing limited downside or limited upside for the rest of the week, and they are interested in some downside protection in what's left of the week. speaking about the week for a second, it is a shortened trading week in the United States, as it is the Thanksgiving holiday. So we are going to be heading into some days of low trading volumes, and again, shortened trading days, just given the holidays in the US. In Bitcoin and digital assets, this could translate into higher volatility for the week ahead. So keep that in mind as you are making your decisions. Moving over to our analyses of the S&P 500, we see here that essentially the US equity markets continue to defy gravity. Not so much this week. We're seeing them a little bit under pressure after reaching a fresh new all-time high yesterday. The S&P last week booked a fresh new all-time high, closing the week higher by 30 basis points at 4,702 points. It has moved higher. Again, we saw it move higher into yesterday's session, and we are seeing it come under pressure today. Some of this changing in sentiment actually came right after the U.S. administration nominated Jerome Powell for a second term as the Fed president. We'll get into some of that shortly. Looking at the Nasdaq, price action, 1 second. We see again, last week it roared to a brand new all-time high, up 2.31%, but it has since given that all back as of today. We see yesterday, similar to the S&P, yesterday it kind of did a little head fake and showed that it might be looking to enter into a new high to close off the Thanksgiving week, but we're actually seeing it come under tremendous pressure today, similar to the S&P 500. The Dow Jones, which we have here, we see actually had a pretty negative week last week, down 1.38%, and again finds itself under pressure this morning, along with the other major U.S. equity indices. Perhaps the most sobering sign from last week, aside from the price action that we're seeing this morning, the most sobering price action last week was the Russell 2000 Small Cap Index, which dropped a whopping 2.48% last week. But most importantly, it actually, with the drop from last week, it sunk back right in that range that we've been tracking basically all the way back since February of this year. This is interesting because this index tracks the small cap companies in the U.S. markets. And this index, by doing so, is more representative of what is happening to middle America. And this index has been struggling. It's been struggling to rise at the same speed of its larger peers. And this is very much a representation of what is happening in society between those who are wealthy and own assets and those whose savings are smaller and don't own assets. And a great example of this, perhaps, to compare the Russell 2000 with the S&P 500 is almost similar to compare, wealthy Americans that own assets with Americans that don't own assets in these environments. If you look at, and a perfect example of this is what is happening in the U.S. housing market. So as you can see from the headline below, home sales are on pace in the U.S. Home sales are on pace to have their biggest year in more than 15 years in terms of sales. And home prices are 13% higher than a year ago. Inventory for these houses is also dwindling. At the current pace, all available homes in the US markets would be sold in 2.4 months. This has created a very tight housing market that is quickly pricing out many, many people. Again, to look back, and again, we've covered this at length, but we've seen that wage inflation is around 5 to 6%. Now we're seeing home prices, the same house over the course of a year is worth 13% more. Your purchasing power is dwindling if you're somebody that has a paycheck that's only risen by 6.24% or 6.5%. Stepping outside of the United States for a second and looking at other markets, particularly around real estate, we're checking in on Evergrande and the Chinese real estate situation. In China, the news broke last week that Evergrande would be selling its stake in a telecom company in order to stay solvent. Given what we know, there's a high probability that this deal is very political and not necessarily driven by market forces. Separately from all of this, just as a closing note before we head on into our next section, it appears, or it seems as though the $1.2 trillion infrastructure bill that was approved appeased markets beyond the Fed's tapering process. At least that's what it seems right now. It's that the market has basically traded one for the other. The Fed is tapering, but they feel comfortable that this new stimulus is now hitting the economy, and therefore the markets have kind of held their form. Now, while we are heading into a shortened trading week, investor positioning on the week back from Thanksgiving may give us a really good clue as to where investor sentiment is sitting to close the year, between Thanksgiving and to close the year. So again, the price action that we see in the week back from Thanksgiving will be very telling in terms of what trends we might see to close the year. Moving over to our gold analysis, we see that gold finished last week down 1.04%, $1,845 per ounce. But this morning, or so far this week, it has been sinking. Basically, it's down 3.22% so far this week. And it seems to have continued selling off aggressively after Monday, when Jerome Powell was nominated for a second term as president of the Federal Reserve, which, again, we briefly mentioned up in the S&P section. These are some of the headlines that are coming out around gold from CNBC, and this one states that gold is sliding over 2% as the U.S. dollar firms after Powell's renomination. We'll talk about the dollar because that is going to be a topic of conversation in the weeks ahead, given the price action we're seeing recently. The move, so speaking on Powell's nomination for a second, the move to nominate Powell was interpreted by markets as a signal that the Fed is likely to continue course on the current tapering plans. So there was a brief period where the market thought that there could be a new nomination for this role, and if a new nomination came into the Fed, then there was a possibility that the current plans might have to change. This won't be the case, it looks like, and so markets are essentially now bracing themselves for this continued tapering. To speak about tapering and what that does and why it's putting pressure on gold, the yield on U.S. Treasury bonds were incredibly volatile last week, and they have soared after the announcement on Monday. To speak about that for a second, this is the yield on the 10-year note so far, up 7.48% this week. Yield on the 3-year note up 4.51% this week. It is Tuesday. So there is a good chance that these could ride higher for the remainder of the week. As we know here, the surge in these implied yields for these U.S. Treasury bonds are a big part of the equation on the real return on these bonds. So because the implied yields on these bonds have surged, inflation has remained the same since last week or 2 weeks ago. So when inflation remains the same and the implied yields on these bonds rise, the real return for these bonds increases. When the real return of these bonds increases, we know that that has a negative correlation with the prices of gold. What we also should highlight is the fact that as the real return of these bonds grows, so does the demand for U.S. dollars, because when the U.S. dollar has a positive real return or a growing real return, people are less afraid of holding the dollars long term because they're getting a real return on those dollars. When the real return on the dollars is negative, they're less inclined to hold them. So as holding dollars becomes more attractive, that puts pressure on gold and other assets, as people might look to put some of their portfolio into that safety of that U.S. dollar. To speak about other market analysts that are seeing similar trends given the U.S. dollar action, here's a recent headline from Reuters that essentially speaks to the dollar dominance that is basically surging as inflation heats up. And this is really because the Fed is just trying to then let interest rates catch up with inflation and almost surpass them to essentially yank them down. But as this happens, the real return on the dollars grows. And so that puts demand on holding dollars, which again acts as a headwind for most commodities. So anyway, as we've covered here so far, the real return on U.S. Treasury bonds are poised to improve into the coming weeks and months due to the Fed tapering. Provided that inflation does not spiral out of control, this should create a tailwind for the dollar and a headwind for gold and other commodities. Moving over to our DeFi analysis, we see that it was a very active week in the world of DeFi and alternative coins. The FTX DeFi index finished last week lower by 6.69%. We're seeing it continue to be under pressure so far this week. Noticeably, the tokens in Compound are actually trading at lows not seen since June of this year. And they are, basically leading the way down as far as the DeFi camp of tokens go. So interesting to keep this note. We're continuing to see the trend that we highlighted in the last few weeks, which is that DeFi tokens continue to be well under pressure relative to layer 1 protocol tokens. So again, continuation of this trend. Another very interesting note from last week's speeches on stablecoins, and this came from the Fed. As we highlighted, the Fed was very active last week, and one of their meetings was squarely around stablecoin regulation. And out of that meeting came out something really interesting came out of that meeting was the fact that Fed Governor Waller, as you have on your screen right now, expressed that allowing only banks to issue stablecoins would limit innovation. This is a very progressive posture and one we hope gets the traction and attention it deserves. Creating a new framework for stablecoin issuers and operators would be much better than trying to fit them into a centuries-old legislation set. It would also position the US as a global leader for stablecoin issuers and potentially draw an enormous amount of investment and press. So we're optimistic to see this posture by Fed Governor Waller, and we hope that, again, it continues to get the traction and attention it deserves. Another trend that we wanted to highlight in the DeFi and alternative token world was the one that we've highlighted. We've mentioned briefly play to earn, the sort of play to earn phenomenon that's continuing to grow around particularly emerging markets. And another trend we wanted to highlight was the fact that a Venezuelan politician last week, this is the first time we've seen this, offered a series of scholarships and Axie Infinity training programs to its constituents if he was elected the winner. Now, there's a lot of things that are, still need to be flushed out with this. And again, the promise was made in the middle of a mayoral electoral campaign, and the proponent is a member of Maduro's regime. So, take it with a huge grain of salt. However, what this highlights is the fact that play to earn has become incredibly popular in countries with suppressed economies. And while some of these regimes are just terribly run and they cannot generate real jobs for their people, authoritarian regimes are experts at spinning opportunities to their advantage. As crypto continues to grow, its benefits can and will be used by some for political gains, and that will happen whether we like it or not. So again, a lot of these things are just politicians posturing to get some, to be able to surf a wave of narrative. But again, between politician promises and what actually ends up helping the people, there's a really long stretch that often does not get walked through. So again, we'll continue to monitor these types of developments that now start roping crypto in with politicians. And we'll keep an eye on which groups are starting to, and where we're starting to see that, what kind of trends we're seeing. Speaking of politics, last week, let's pop this headline out. Speaking of politics, last week, hedge fund billionaire Ken Griffin, a person that is not necessarily the most loved individual in the crypto community, outbid an Ethereum DAO, a decentralized autonomous organization. And the name of this DAO was Constitution DAO. If you haven't yet heard of it, it became quite popular last week. And essentially, Ken Griffin outbid the DAO in a bid to purchase a copy of the US Constitution. Now, while this is a crazy headline, like if we read this, it sounds like a movie. Hedge fund billionaire outbid crypto investors for a rare copy of the US Constitution. This is a crazy headline, and a movie will likely be made about this one day. But the even crazier part is the fact that the Constitution DAO raised over $40 million. But to raise those $40 million, it had to pay $800,000 worth of fees. This works out to about a 2% transaction fee on average for the contributors to the DAO. To add insult to injury, participants would have to pay roughly the same amount to get their money back. So while this was an incredible social experiment, it does highlight how expensive it has become to use the Ethereum chain and why so many people and users are motivated to try new blockchains just to kind of get around these high transaction fees. Checking in on our mining difficulty commentary, we see that not much has changed on this front. Our next adjustment is scheduled for this coming Friday tentatively and is projected to bring difficulty up higher by just under 1%. The mempool, just checking in here. As we can see, the mempool continues to be in good shape. Transaction costs and speed remain optimal. And as always, we wrap up with what's ahead for the week. To close this section this week, we wanted to speak for a second about our experience in El Salvador. I and a few members of the Latin team had the opportunity to visit or to travel to El Salvador last week to attend La BitConf. It was an absolute pleasure to shake hands with so many of you that have supported us over the years. And it was incredible to see how the entire country has embraced Bitcoin and is embracing Bitcoin. We came back incredibly inspired with a desire to keep building. The bold moves that El Salvador is taking are both inspiring and courageous. At the same time, if the bond offering is successful, it will effectively remove the country from a lot of checks and balances. This could change the geopolitical landscape forever and could also have unintended consequences. While Bitcoin is apolitical, politicians will definitely try to capitalize on it. We believe that Bitcoin has the potential to change the lives of many for the better. And we believe that the lives of many in El Salvador will be better in the future as a result of the recent decisions. However, Bitcoin should not be married to any one political party, and we must ensure that the power that Bitcoin can create is used for the benefit of everyone. As always, we wrap up with a summary of the upcoming economic data and earnings reports for the week. It is a short trading week, so we have a lot of activity packed into Wednesday and not a lot of activity everywhere else. So again, here's a summary of all the things we can expect on Wednesday, as it is the last full trading day before US Thanksgiving. So 8:30 a.m. Wednesday, we get initial and continuing jobless claims. So we get a look at the US labor market. At 8:30, we get the US GDP revision. So essentially, this is the more accurate version of the gross domestic product that the United States puts out every quarter. At 10 a.m. Eastern, we get a look at the US consumer with the US personal income and real disposable income numbers. Interestingly, both US personal income and real disposable income dropped by more than 1% last month, and they should continue dropping given the negative effects of inflation on real disposable income. So interesting to look at this piece of data. Again, at 10 a.m. Eastern, we also get US core inflation and 5-year inflation expectations. And while these numbers are not that important in the eyes of the Fed, high inflation numbers could provide for punchy headlines going into Thanksgiving, setting the stage for dinner conversations all over the country. And at 2 p.m. Eastern on Wednesday, we get the FOMC meeting minutes. Investors will be reading through the minutes to see if they find any new additional details in the Fed's tapering plans. Again, any new information here could set the stage for a headline and a Thanksgiving dinner conversation. So it is a big week coming up. Happy Thanksgiving to our friends in the United States that will be celebrating this week. If you have any questions, if you have any feedback that you would like us to include in the future episodes, please drop it in the comments section. If you enjoyed the show, if you learned something, we welcome you to subscribe, like it, share it with your friends. If you don't yet have a Ledn account, I welcome you to check out ledn.io and learn how you can start earning up to 9.5% on your USDC and up to 6.25% on your first Bitcoin. We also have the best rates for Bitcoin-backed loans if you need liquidity but don't want to sell your Bitcoin. And this week is the last week to participate in our One Bitcoin giveaway. If you refer your friends and family, some conditions apply. Please check our website for full details. Thank you, everybody. Have a wonderful week and see you next time.